You filed your taxes last April, probably dreading the whole mess of forms and receipts. You wondered if the IRS would audit you. Ever wonder what would happen if the IRS just vanished completely and taxes became as simple as buying groceries? Today, I'll explain the Fair Tax Act of 2025 like you're 5 years old. By the end, you'll understand exactly what abolishing the IRS really means. You'll know whether your tax life would actually get easier or just different. Most people hear eliminate the IRS and think it means no more taxes at all, like some magical tax-free utopia where your paycheck suddenly gets bigger and nobody ever has to pay the government again. But here's what nobody tells you. The Fair Tax Act doesn't eliminate taxes. It eliminates how you pay them. Instead of the government taking money from your paycheck every 2 weeks before you even see it, they'd take it differently. They'd take it when you buy stuff. Every single thing you purchase would have a 23% national sales tax attached. That shirt plus 23%. That new phone plus 23%. Your groceries, your gas, your Netflix subscription, everything. The money still goes to the government. It just comes out of your wallet at the register. It doesn't disappear from your paycheck before it reaches your bank account. Now imagine your paycheck as a pie. Right now, the government takes slices before the pie even gets to your table. Federal income tax takes a slice. Social Security takes a slice. Medicare takes another slice. By the time the pie reaches you, it's already half-eaten. The Fair Tax Act wants to stop that. They want to give you the whole pie, every penny you earn, completely untouched. No withholding, no payroll taxes, no income tax forms. Your paycheck would be 100% yours on payday. Sounds amazing, right? But here's the catch. When you go to buy an actual pie at the store, that $10 pie now costs $12.30. The government still gets their money, they're just collecting it at a different moment in your life. This matters because it completely flips how you experience being taxed. Right now, taxes feel invisible. Others hate it because it makes everything feel more expensive, even if mathematically you're paying roughly the same total amount. But here's where it gets wild. The Fair Tax Act includes something called a prebate that most people completely misunderstand. A prebate is a monthly check the government sends you. It covers the sales tax on basic necessities up to the poverty level. Think of it like this. The government calculates how much a family your size needs to survive. They figure out what the 23% tax on that amount would be. They send you that money every single month before you spend it. If you're a single person, you might get around $200 a month. A family of 4 might get $600 or more. This money isn't based on your income. Billionaires get it. Homeless people get it. Everyone gets the same amount based purely on household size. Now check this out. People say abolishing the IRS like it means the government stops watching your money completely. But someone still has to send out those prebate checks every month. Someone has to track that you exist, that you have 3 kids, that you moved from Texas to Florida. Someone has to process address changes and verify identities and prevent fraud. Someone has to make sure dead people aren't collecting prebates. That someone isn't the IRS anymore under this plan. But it's still a massive federal agency doing basically the same kind of administrative work. The Fair Tax Act proposes creating new systems under the Treasury Department. It requires state governments to collect the sales tax just like they already do. But make no mistake, the bureaucracy doesn't disappear. It just gets rebranded and relocated. This matters because the promise of no more IRS is politically powerful but practically misleading. You wouldn't file a 1040 anymore. That part is real. No more April 15th panic. No more wondering if you claimed the right deductions. No more keeping receipts for 7 years in case of an audit. All of that vanishes. But you'd still interact with government systems. You'd still need to register for your prebate. You'd still need to report major life changes. If you're a business owner, you'd still need to collect sales tax from every customer. You'd file reports and send that money to the government every month. Restaurants, plumbers, hair salons, online stores, everyone selling anything would become a tax collector. The complexity doesn't disappear, it just shifts from individuals to businesses. Here's what you need to understand about who wins and who loses under this system. If you're wealthy and you save or invest most of your income, you'd pay way less in taxes. You're only taxed on what you spend, not what you earn. If you make $1 million and only spend $100,000 a year, you're taxed on that $100,000 of consumption. You're not taxed on the full million of income. But if you're middle class or poor and you spend every dollar you earn just to survive, things are different. You're effectively taxed on your entire income through purchases. The prebate is supposed to fix this by covering basic necessities. And mathematically, it does lift the tax burden on essentials like food and rent. But here's the reality. Poor families spend 100% of their income. Wealthy families spend maybe 30%. A consumption tax, even with a prebate, naturally benefits people who can afford to save. Then comes the question everyone asks. Would audits really go away? For you personally, yes. The IRS wouldn't be knocking on your door asking why you claimed a home office deduction. You don't file returns anymore, so there's nothing to audit. But businesses? They'd get audited constantly. Every store, every restaurant, every online shop would need to prove they collected the right amount of sales tax. They'd need to prove they sent it to the government. State revenue departments would become the new audit enforcers. If you own a business, your audit risk doesn't drop, it skyrockets. You become the tax collector, and if you mess up, you're the one facing penalties and investigations. Bows. Now here's the part that makes this whole thing complicated. What counts as a new purchase that gets taxed? If you buy a used car, does that get taxed again? Does it get taxed even though someone already paid sales tax on it when it was new? The Fair Tax Act says yes, every retail transaction gets taxed. That means the same car could be taxed 5 times as it changes hands. Supporters say this is fine because your income isn't being taxed anymore, so you have more money to cover it. Critics say it would absolutely destroy industries that rely on resale markets. They say it would make homeownership even more unaffordable than it already is. And here's the elephant in the room: enforcement. Right now, your employer reports your income to the IRS automatically. You can't hide it. Under the fair tax, businesses report sales, but cash transactions become invisible. If a plumber fixes your sink for $500 cash and doesn't report it, nobody knows. The temptation to operate under the table would explode. Black markets would thrive. The government would need massive enforcement systems to audit businesses constantly. This brings us back to the same problem. You still need a huge federal agency doing tax enforcement. It just focuses on businesses instead of individuals. Here's why this matters beyond the math. The Fair Tax Act is as much about philosophy as it is about revenue. It's about whether you think taxation should be invisible and automatic or visible and voluntary. It's about whether you trust individuals to manage their full paychecks or whether withholding protects people from themselves. It's about whether you believe consumption taxes are fairer than income taxes, or whether they shift burden onto people who can least afford it. These aren't just policy questions. They're questions about what kind of country you want to live in. The Fair Tax Act has been proposed repeatedly since 1999. It's never passed. It probably won't pass in 2025 either, but it keeps coming back because it taps into something real. People hate the IRS. They hate tax complexity. They hate feeling like the government takes their money before they even get a chance to see it. The Fair Tax Act promises simplicity and transparency. It would replace everything with a 23% national sales tax on all purchases. You'd get your full paycheck with zero withholding. Every household would receive a monthly prebate check covering taxes on basic necessities. The IRS wouldn't audit you personally anymore, but businesses would face constant scrutiny as the new tax collectors. Used goods, homes, and services would all be taxed at point of sale. Wealthy savers would likely pay less overall. Middle-class spenders might pay roughly the same. The system still requires massive federal administration, just under a different name. Enforcement would shift from tracking income to tracking sales. The bill has near zero chance of passing, but represents a fundamentally different vision of taxation. So here's the real question. Does making taxes visible at every purchase make the system more honest and fair? Or does it just shift the burden onto people who spend everything they earn to survive?